Welcome to the Financial Advisor Success Podcast, where you go behind the scenes with financial planner, speaker, and consultant Michael Kitces to hear stories of how leading financial advisors navigated the inevitable challenges that arise on the path to success, and get insight from leading industry consultants about how to break through to the next level in your advisory business. And now here's your host, Michael Kitces.
Welcome, everyone. Welcome to the 460th episode of the Financial Advisor Success Podcast. My guest on today's podcast is Stephanie Hughes. Stephanie is the CEO of Hughes Family Office, a multifamily office based in Florham Park, New Jersey, that oversees approximately $1 billion in assets under management for 220 client households. What's unique about Stephanie, though, is how she has established the operational systems required to serve ultra-high net worth clients efficiently and securely as her practice has grown beyond $1 billion in AUM in just 7 years. In this episode, we talk in depth about how Stephanie and her firm are able to provide clients with a one-stop shop for their financial, legal, and tax needs, reducing the stress clients face when managing stakeholders across several different firms. How Stephanie finds that integration across the firm's different services and active communication amongst team members across the business is a key driver to the firm's success and a differentiator from firms focused on one primary service area, and how Stephanie prioritizes having strong internal controls in place given the volume of high-dollar client transactions her team processes that, if mishandled, could create significant tax burdens or expose them to fraud. We also talk about how Stephanie encountered challenges hiring for positions in her multifamily office environment because of how her practice's processes differ from what candidates might have experienced at other wealth management firms, why Stephanie looks beyond a job candidate's skills to take a deep dive into their personality and motivations to ensure they'd be a good fit for her firm's culture, and how Stephanie finds that gaining experience in client service is valuable for aspiring advisors at her firm because it exposes them to the complex nature of ultra-high net worth client service needs and the importance of diligence when managing money movements and other transactions. And be certain to listen to the end, where Stephanie shares how her clients can use a dedicated email address that goes to several members on their planning team, given that a question might require tax, wealth management, and/or legal expertise, why Stephanie's firm is creating an internal workflows tool to manage its robust approvals process, as well as another tool to monitor accounts and communications to detect signs of fraud, such as changes to their phone number and address. And how Stephanie finds that being linked to an accounting firm not only provides her practice with a steady flow of good fit clients, but also fosters an immediate sense of trust given new clients' years of experience working with the firm on business and personal tax issues. And so, with that introduction, I hope you enjoy this episode of the Financial Advisor Success Podcast with Stephanie Hughes. Welcome, Stephanie Hughes, to the Financial Advisor Success Podcast.
Thank you so much, Michael, for having me. I'm super excited to be here.
I really appreciate you joining us today, and I'm excited to get to, I think, just really dig into what it truly takes operationally to serve ultra high net worth clients, right? Because of our family office, multifamily office world. Because we've seen for years just advisors have a tendency to sort of gravitate up market to higher dollar clients over time. Some of us sort of pursue that as a proactive strategy because just you find that it's more remunerative to work with higher dollar clients with higher stakes problems. And to some extent, that's just an expertise thing, like learn your investment stuff and your tax stuff and your financial planning stuff, or like bring together a team of experts and hire that within the business to be able to deliver on it. But I find it's more than that, because even if you got a firm full of like really smart attorneys and accountants and investment folks and financial planners all working together in this wonderful team-based approach for high dollar clients, like you still have to actually work together on a coordinated basis.
You hit the nail on the head.
Amongst all these clients, right?
That's right.
And that's not it. I mean, you need the expertise, but that's not an expertise thing. That's like a systems and process and operations thing.
Absolutely. The operational aspect of dealing with complex clients is extremely nuanced, and it's super interesting. And, you've got to be ultra collaborative, but also really step into the shoes of the other professionals, how they think. Of course, it's so fun to all be working for the same client, all have the same vision, and everybody's on board. That's the most important thing. But yes, building the operational piece and the structure around that is extremely complicated, and it takes a Herculean effort to really get it to the point where you're really scaling for these clients.
So I'm excited just to dive into, I don't know, like the nerdy operational guts of like
Oh, I love
do you
it. I'm
how do
I'm
you
so excited.
literally yeah, like how do you literally execute on that? But I think this is a
Yeah.
as a starting point just to help everyone get oriented in the first place. Like, can you take a few minutes and just tell us about the advisory firm itself, so we kind of understand the context of the business that you do and who you serve, and then we'll then we'll roll up our sleeves and get into systems and process.
Sure. So we are a multifamily office, and the backbone of our company is an accounting firm that's been in business since 1969. It's called Wiss and Company, and the accounting firm has been helping middle market businesses and their families since then. We do about 10,000 tax returns. We've got different niches: real estate, food and beverage, and the investor backed niche. Um, you know, engineering and construction, and the clients are all from the accounting firm, and we end up helping them with all things financial, and when they have some complexity, whether that's a transition in their business, they sell a business, they just need help with kind of building their personal wealth on the side of a business to diversify their risk. um, as you know, these business owners have very complex tax situations and complex estate plans, and we kind of built the advisory practice around that.
So, so then just help us, I guess, think of just core metrics of the firm, of like clients, AUM, if you're AUM based, revenue, just like help us understand the overall scope of how many are there and who you're serving.
Sure. So we have currently about 220 ultra high net worth households, and the households are multi generational. They have very complex tax situations, as I mentioned, and they have to navigate this complexity. So they need a place which is one stop, which understands the nuances in their business, how their business was built, how their wealth was created, and also the nuances of the family and the estate plan. In terms of AUM, we're just over a billion in AUM. We've got 1.4 roughly in AUA. We started 7 years ago. So, we're growing very rapidly, which has also been a pain point on the operations side. It's been an incredible journey, but we're working to keep up with that growth, and we are very selective with our clients. We're not looking for all clients, if you will. If they're not the right fit for us and we know we can't be the right partner, meaning they don't have that complexity, then maybe they don't need us. And we're very, very honest about this, and we want to work with the right people who really need a family office like ours.
So that massive growth, like a billion of AUM in 7 years, that's starting from scratch. What happens when you turn on a wealth management business in a sizable accounting firm?
Right. Exactly. Well,
Wow.
also, it's interesting because not all accounting firms have the kind of the this vision and the collaboration on the leadership team where they trust the wealth management advisors. Also, it's also a risk for them to go from a trusted advisor, an objective advisor, their fiduciaries as CPAs. They are the most trusted advisor, which is something that I think it's the world's best kept secret for a new financial advisor. Is the CPA really does hold the keys to the kingdom and all the data, all the information. They've grown up with the clients and their business, and they know all the secrets really. And when they get on board with a wealth advisor and really kind of, I'd say they took us in a way, and they really, you know, they were very trusting with us, and of course we worked very hard to have that trust. But we collaborated, and it was a real kind of joint collaboration to come up with the vision and the strategy. And we are fully integrated, and that's why it works. It, like I said, it doesn't work in all accounting firms because there isn't that integration and that collaboration and that joint vision and that joint trust. But here we have it, and we have something very, very special. It's we are, we are servicing these clients. And I would say if you're an individual advisor, you never meet these types of clients on your own. But here, it's just part of the structure, it's part of the platform that everybody is we've worked very hard, obviously, to make sure everybody understands internally what we're doing, and make sure everybody's aligned. And we spend a lot of time on that. Make sure everybody understands what the vision is and why we're better for clients. And that's why we've had such success.
So I want to understand a little bit more about just firm background, and then really start diving into like how do you make sure everyone is aligned.
Yeah.
So what is the staffing side of the business? Like how many of you are there serving these 220 ultra high net worth households?
So there's about 40 of us in the multifamily office, and that's a whole practice, one of the 4 practice areas. So that's including the actual people in the RIA, plus other professionals who do everything for the high net worth individual and family. So ultra high net worth and high net worth tax, bill pay, um, trust and estates professionals. And these professionals everybody is collaborating very closely, working together. We have client teams. No one person can serve any of these clients. They're so complicated that we end up having many internal meetings prior to any kind of external client meeting, just to make sure everybody really understands the nuances on the tax side, what's going on behind the scenes in the business, what's going on with different people in the family, budgeting, spending, tax payments, all of that stuff goes into the planning for every single meeting, I would say. So it's the staffing is, it's a very collaborative environment, I would say, for anybody working in our business.
So I think I heard you say you kind of segmented. There's the people in the RIA, and then there's the people in the practice area. Can
Uh-huh.
you, I guess, like explain or distinguish what
Sure.
those are and what the difference is?
Yeah, so the RIA is governed by the SEC, and this is why it's kind of there's a legal separation, but we're fully integrated when it comes to the client and the actual service offering. So, but because the SEC monitors people who specifically give investment advice, those people are in a different legal structure than the rest of the folks in the practice area. But the whole thing it's family office.
Interesting. So I guess so from the accounting firm's end, or I guess from the external client end, like it's a 40-person multifamily office serving these 220
Correct.
ultra high net worth households. Internally, entity wise, no one
Yeah.
really likes to invite regulators into more of their business than they need to. So the people that do the investment things are under the RIA, and the people that do the other things are under the accounting firm. Uh,
Yes.
from a I guess like a management and a
A
regulatory.
regulatory standpoint, exactly.
So who or which functions like actually live and have to stay in the RIA?
So the functions that have to stay in the RIA are the investment advisory,
Okay.
investment advisors.
And so that's basically it. Like I guess, whoever actually has to mention investment things in their client conversations or
Correct.
give recommendations, and I guess anyone sort of doing
Licensed.
the trading
Yeah.
implementation part.
Correct. Hmm.
So how many of the 40 are actually on the RIA side?
12.
Okay, which interesting framing unto itself. So 30% of the headcount is doing the investment things, and
Yes.
70% of the headcount is all the rest. That
Correct.
kind of says a lot unto itself.
And then on top of that, we're collaborating, on a day-to-day basis with the rest of the accounting firm, meaning people who aren't specialized in ultra high net worth and high net worth things, but who are, for example, on the real estate side or on the food and beverage side or on the construction and engineering side, and they happen to refer a client to to the family office. So they're still involved in the relationship because they're the main the main trusted advisor. So they're fully integrated into this, and that's why this actually works and is very effective.
Uh, but I guess I can also infer from that. So I guess the 28 people in the practice area, but not part of the RIA. they are fully like dedicated to and employed in the multifamily office offering. This isn't just a like, well, we're an accounting firm. There's a bunch of CPAs centralized that also prepare some returns for clients. This is like dedicated staff
Yes.
specifically serving
They're
the
serving
family
ultra high
office
net
area.
worth clients.
Okay.
Yeah, they're specifically serving ultra high net worth
Okay.
clients.
Interesting. So so then I've got to ask because now my brain starts going to like the nerdy technical operation systems questions. So like, do they have to sign multiple agreements? Do you have to bill
Yes,
fees from
yes,
multiple entities? Like, how does that
yes.
work?
They are signing different agreements for the wealth management side and the other side.
Okay. So clients will get to agreements. I just imagine in practice, it's pretty straightforward. Explain like this is the investment things, this is the other stuff.
Yes, and
Uh,
most of the time, I mean, not most of the time. A lot of the time, the client is already involved on the other side of the business, and then
okay.
unless it's a new client to both, they've already signed the agreements that they would have had to be clients of the accounting firm.
Okay. So, and then fee wise,
Hmm.
I mean, do you have an advisory fee and a
We
rest
do.
of the family office services fee?
Yes. So there's an AUM fee
Okay.
for the assets, and we always say we feel like we're very reasonable because for that fee, you're getting the full integration, which is really the painful piece that clients miss when they're not with us, and they have, let's say, an accountant and a consultant and someone helping them with their business growth, and then they have a lawyer, and and they're complex and they're very, very wealthy, let's say over 20 or $50 million, that's painful, that integration. And they typically would have to do that themselves if they don't have a multifamily office like ourselves, with the accounting firm as the actual backbone of the operation. That's really, I think they feel the pain. And so the fee is kind of, we say it's pretty reasonable on the AUM side.
So does AUM cover everything and you like internally account some of the AUM fee back to the other services? Or is there a like, multiple services, multiple fees kind of thing where this
Yeah,
is
it
for your advisory,
depends.
this is for your tax?
It's really kind of dependent on, it depends. I mean, typically it is different fees.
Okay.
But there might be exceptions to this.
So can you give me some sense at least of what's typical and then what what kind of exceptions crop up that break you?
Yeah. So, if something is kind of in scope of, like, you can get very complicated on the tax side, and typically, like a large client with a business and with entities and with a complex estate plan will have a pretty complicated tax situation where the tax work can be, a majority of the time spent in the relationship. And in that case, we wouldn't say, let's do internal journaling and internal kind of accounting to make this happen under kind of one fee. Um, so on that front, I mean, you can have, let's say, a death in the family, and that tax return could be several hundreds of thousands of dollars in just to prepare it, because of the hours spent, because of the complexity. So we don't typically, typically it's separate, but if it's something that's very simple on the accounting side of the practice, we might, if it's a client that's less complicated, then that could be a conversation. But that's not our typical client is pretty complicated on the tax side.
And so then what's the advisory fee you have to charge to make this math work?
Yeah, so it's a standard fee schedule. So at $1 million, which is, we typically don't have standalone clients of $1 million. They would be under, a family,
Okay.
where we'd aggregate fees, and we'd aggregate assets in the back office, and we would they would all count towards the AUM fee. So, but at $1 million, it starts at 1.1%. 4 to 10 million, it goes to 0.90%. per annum. 10 million to 20 million is 0.85%, and 20 million and above is 0.65%. So I'd say we're
Interesting.
kind of middle of the fairway there.
Okay. And those are graduated fees. So like even if I'm at 11 million, only the last million's at the 85 basis points. The first 10 is still at the higher tier.
No, the whole thing is at the lowest tier.
Okay, the whole
So
thing.
yeah,
So like once I
yeah,
hit that threshold, my whole fee notches down.
correct.
So I just gotta ask, I mean, do you get concerns around situations like, I mean, I'm pretty sure if I math that out, you're like a $21 million client actually pays you less than a $19 million client because they just
No,
notched
I mean,
across the threshold.
not really. I mean, we're concerned with, just having the right clients
Okay.
overall. So
Okay. And uh and so I guess I would interpret internally then uh that advisory fee doesn't just cover I guess the investment management services provided by the 12 and the RIA. This fee needs to cover the total services from the 40 people in the practice area.
typically it doesn't. It's separate because of the
Okay.
separate fees.
Okay, because the depth of the tax returns that you get into actually really won't cover it at even with these
Exactly.
advisory fees at these asset
Exactly.
levels.
That's why it's separate. That's why the
Okay.
fees are separate, or there's something in the business, there's a valuation, there's needed that, these clients have so many things going on in their businesses typically that it has to be separate.
Okay. So then can you help us understand a little bit more of just who the typical client is, like what the profile is of a typical client that is hitting your version of complexity sweet spots that you serve them well?
Sure. Yeah. So typically, again, the we're kind of getting these clients internally. We don't go out and externally look for
Okay.
people. So we call it a B2B2C model. Like the client comes into the accounting firm, they become an accounting firm client or are an accounting firm client, and then they come over to the family office. And it's the business that is the first client. And within, while building that
Ah.
business relationship, the business owner um, becomes close to the CPA, and that's how the
Oh,
relationship
interesting.
is initially built.
So
Now,
sorry, I just want to make sure I understand that. So it's not even just you're a tax firm, the business owner like gets their tax return prepared first and then gets referred over the family office. If I'm hearing this right, the business is usually the client
correct,
first. So
exactly.
you're
We don't.
doing business,
Yes,
you're doing accounting, you're doing outsourced
helping them grow
CFO
their
work, valuations,
exactly,
like it's that
helping
kind of
them
work.
exactly.
Interesting. So what's the typical, I guess, like size of a business that employs the accounting firm?
Yeah, I mean it's big. It's a middle market. So typically revenues of anywhere from 20-50 billion to half a billion.
Okay, which is that constitutes the middle market segment in the accounting world.
Yes, and then they're, the owners of those businesses and their families.
Right, right,
Those are the clients that would come over to the family office.
right. But they're hiring the business first for
Typically,
CFO
typically
audit, something like that. Just
tax
very
structuring,
non-advisor things, like businessy things.
business advisory, advisory, business advisory,
Okay,
tax, for example. And if they are just being right now, if they do come into the firm and are not related to a business, like it becomes a wealth management client. We're not looking to have, to onboard individual tax clients necessarily, unless they're a single family office or, extremely complicated.
so I guess just given businesses at that size, I mean you're talking about firms that may be valued at tens of millions up to hundreds of millions and maybe even a billion or few. Obviously, not every firm has one single founder owner who still owns the whole thing, but
A lot of them do.
yeah.
We have a lot of family businesses where, it's a couple people in the family, or, that's a big part of the organization.
So then, like the broader net worths of households that you're working with, like these are deca millionaires and 100 millionaire kinds of folks?
Correct.
Okay.
Typically.
So now share with us a little bit more around what the service offering itself is. I mean, what do you we actually, I mean, you've highlighted like all the different experts and we're integrated in what we do, but can you now go into more detail just what really you actually do for
Yeah,
for these clients
absolutely.
and the fees
So
that they pay?
we are truly, providing these very, very, like these ultra high net worth concierge services. So we do everything for them. I mean, they lose their paperwork and we're redoing, they lose a passport, we're redoing all of that. Like we are truly trying to help them in any way that we can. And, we take risk on doing that. We pay tax payments for them directly to the IRS for the entire family, for all the trust accounts, for the LLC accounts. Like we have, what we call standing instructions to do that. And this is a service that, it's not something that the banks want to take on because of that direct line, and that risk. Obviously now, um, the IRS is going to move to not having paper checks, so it's going to be direct debits. But like, we have internal controls to make sure that things get done smoothly. So anything from really making sure that we're doing their entire tax plan and their entire estate plan, and you know doing all of that also around transactions and modeling out different scenarios if so that they could save on the tax side, whether that's through charitable planning or other vehicles. We are also kind of mapping out a financial plan that's tax efficient as well. And the big word here is tax always. We are investing according to the tax plan. And that takes very close collaboration with all the professionals in the family office and their relationship manager, whether they're outside the family office or not, and really really close kind of integration, I would say. And that's a difficult thing to pull off operationally. It also makes it very difficult for us to hire because advisors aren't used to that. They're not used to paying attention to tax and collaborating with 10 people every time they have to have a meeting, or they're not used to kind of digging through a tax return or having other advisors in the meeting, or being so worried about the estate plan. And it makes it really interesting, but also it's very difficult to just eat, breathe, and sleep all of these dimensions every day as an advisor. So I think, when it comes to hiring, our the talent pool where we hire it's smaller than, I would say, if you're hiring in a wirehouse.
So can you, I guess, just describe for us further how you actually make sure like all these little things and their details get done? Because you mentioned like there's all sorts of controls in place around paying clients' tax bills to the IRS for them and the family and the trust accounts and the LLC. Like
Yeah.
the right account has to pay the right bill at the right time, right? There's a lot there.
Hmm.
Um, so for those of us who like don't come from a background of accounting firms with internal controls, like can you explain more? I mean, like what do you do? How does this work? How do
Yeah,
you
I
keep
mean,
track of it? How do you make sure it doesn't get screwed up?
yeah, I mean, we literally, when we were built, every time we built something, and again, we started with this big vision and we kind of went backwards from there and we said, where's the client pain? Okay, let's build that. Let's build around that. Let's do this. Well, it'd be great if we could do this. It'd be great if we could do that. And, we kind of worked backwards and we set up our own internal controls. I'm not going to lie, there's a lot of effort and very, very detailed people who help us. We have accountants in the RIA as well who are very good with details. Sometimes there's no way to get away from the 4I check, but everything has these approvals that, again, it's something that's like not usual in on the RIA side or even on the wirehouse side. Is you on the I came from Merrill Lynch and you would just send payments out and there's nobody kind of double checking the details. Here, it's like every time you enter a money movement or a client service associate enters a money movement, somebody else approves that money movement and has to go through the entire thing to verify not only the value, but every other detail and cross-check that with kind of a backup of what is supposed to happen. So this is for trading, because God forbid we put a trade in, we sell something, and we create or we realize like a 200,000 or $1 million of capital gains just from
Right.
entering a
Wait,
trade. That's on us. We're an accounting firm. We can't do that, and that would be mortifying. So we have controls on the trading side as well, which is also something that I haven't seen in other RIAs or on the wirehouse side like we do here. So every operational kind of function has a control or has a control
so con-
function as well.
so control in this context means someone else that has to review and approve the thing.
Yes, correct. So
So
any money movement, tax payment, adding standing instructions, even client paperwork, because you have things like you know, trusts that own LLCs, uh, layered entities, disregarded entities. You've got all sorts of complex things going on. That paperwork has to be correct. And the account has to be opened correctly. And that's something, again, like the stuff that people struggle with in other RIAs or at the banks, we built here. And we have these controls in place so that these functions could be carried out very seamlessly for the client, and the client doesn't feel that pain, which they do, when they're not in this structure.
interesting. So I'm just envisioning like I don't know CRM systems or some effect where just every workflow is a like client service administrator does this, then client service manager reviews it and clicks yes
Yes.
to actually clear it every time there's a money movement, every time there's a trade, every time we're doing paperwork on behalf of the client, just so there's
Yes.
always a second set of eyes to make
Always.
sure the thing was right.
Correct.
So all right, so now my next natural question is like, how do you track it and how do you staff for that? Because that sounds like a ridiculous amount of busy work oversight. I understand why it's there. I'm not negative. Like that's a lot of
Oh,
things. Every
it is a lot of
people look at
oversight.
everything every time,
It
and you have to
absolutely is. Well, you
track
have
it
to.
all. So how does that work?
Yeah, yeah. I mean, we are in the process right now of looking at every area in the firm and doing some transformation and creating our own workflow tools. So that's work right now that's stuff we're working on right now and kind of trying to automating these processes more.
So
Um,
wait, so you're
we're building a tool because it doesn't really, it's not out there. You meet one family office, you meet one family office, as they say, and we
so what
have.
what do
Yeah.
you use now, or what have you used historically to do this?
Yeah, I mean, CRM, we use Redtail, so we do have a lot of the information in Redtail combined with Excel, and there's other uh, you know we already have our own it's share file that we're using, but we have our own internal kind of things at the moment, but we're getting them more to work across these functions now, if you will.
So you're looking to build some kind of workflow tool outside the CRM system.
Yes, yes.
So can you share more about that? I mean, are you building from scratch? Or are you like
Yeah, we're
finding
building
something
from
out there?
scratch. So we already have these processes built, and look, it works how it is. And the level of approvals that we have is, again, because some of these money movements and trades are so big that we can't really, you know we can't really take any risk with that side of
Right.
things. And to build it out, it starts from really kind of when we have a prospect and we know certain things about outside accounts, and then let's say that prospect, which is a client of the accounting firm but not yet a client of family office, comes over to the family office, becomes a client. It all starts with, do they need standing instructions to the IRS? Do they need kind of a cash account standing instructions to their wherever they're doing their checking? And where are they transferring their assets from? And we're building out this template for the advisors to really fill out, so that the onboarding gets automated. And then you've got the financial planning software. We use eMoney, we use Orion, which, on the back end is very strong technology wise. We did explore other tools as well. This tech stack does work very well for us at the moment, but it's the integration of all these different processes, which are particular to the multifamily office and are particular to these larger clients, that create the complexity. So, we haven't found a tool, and we're building that, from the onboarding template, where it's going to help us really fill out paperwork, with the custodian, instead of having different areas where we're recopying information for the approvals. The tool is going to feed different kind of templates, and the approvals will be done on that. There still has to be a manual check until we feel comfortable that there's AI that can help with these things. But we have used AI for other things. We use Holistaplan, that software, to look at tax returns, but it's limited as well. We have Virgil, where we're scanning investment statements, and that's cutting out some. That's cutting down on some of the or the labor hours that we had before, but we still have a ways to go with AI to fully use it, to help us. We're not fully there yet, in terms of what we have there to help us with all of our processes.
But sounds like AI for you is very heavily around sort of document extraction things. Scan the client's existing tax returns, scan the client with Holistic Plan, scan the client's statements with Virgil.
Right now, yes,
Okay.
that's how we've been using it. And obviously, we use it. We've got Copilot, which we use for other things. But yes, currently those are the tools that we have. We're exploring other tools for onboarding as well. But there's so much out there that we have Fathom as well, Note Taker. But in terms of, we are looking at everything coming out. We just haven't found anything that yet that, operationally, like, we can fully adopt.
So help me understand further just where the gaps are from using Redtail for CRM and some of the workflow capabilities they have there, and what you're still trying to do that so can't do it, that you just need to build your own tech to do it. Like,
Yeah,
help me
that's a
understand
great
more where
question.
the gaps or the pain points are.
Yeah, so I would say when you have collaboration between different departments, for example, the tax team is using their own software to populate tax returns and to determine any estimated quarterly payments, for example, and then that's not something that we're on. We don't necessarily think that advisors should be in tax software entering different things, and we could kind of make a mistake in there, and that's not the right thing to do. So when it comes to kind of integrating two different areas, then we kind of
Okay.
have to build our own tool. When it comes to like these approvals as well, we're doing that. We're using Redtail to assign the task, but we're not necessarily documenting a full approval in there. It just hasn't worked for that. It's not built for that necessarily. So that's where we're building around it. Or the steps in the onboarding process that we're using with the standing instructions. um, you know, we are using Redtail in a way, but then it's kind of beyond that when we're doing an account transition, and we have other templates that are going to feed through to the trading system and to the approval system, which is why we want to kind of build our own. The other thing we're building is, that we have already, to an extent, is it's it's our own internal kind of compliance checks on the accounts. For example, let's say there's a change in phone number, a change in an email address on a client account, and the tool that we have that we built is it scans differences, and it pulls all the emails for across all of our accounts, and it scans it against yesterday's emails, because
Okay.
that's kind of a check for fraud. So we're going to be building
Oh,
that out for standing instructions added by clients, and other things that happen at the custodian level that we wouldn't necessarily know about. So for us, it's super important to build out this like kind of cybersecurity, if you would call it, but on
Yeah.
at the custodian level too. Like we want to bring that in house, so we're working on that as well.
Interesting. So you're essentially building like a monitoring tool to monitor for any notable changes in address, phone number, or standing instructions, et cetera. Um, because at your client level, like the one of the precipitators to fraud is, you change the client's phone number on record and then you heist their account with
Exactly.
multi-factor authentication to the new phone number that's not actually theirs, it's the hackers.
Exactly. So all of these things, it's something that definitely occupies my mind. Especially in this new environment that we're in. But we're always thinking about it, and we got to do everything that we can to just make sure that our clients are safe, and
So
it's on us to just add these extra controls. Really.
So new environment we're in, meaning like more AI driven
Yes.
environment.
Yes.
So has that cropped up for you in practice with clients? Like, are you seeing a shift in, I don't know, for wire fraud or other attempts or
Thankfully
attempts
not.
to compromise them?
Thankfully, no.
Okay.
We've been very lucky that we've had a client, just one client, who has had their email hacked and notified us immediately. But other than that, we haven't had any situations where this has become a reality. But we've heard from, clients that have been at other places. We've heard of things happening. So it does, it is a reality.
Yeah,
So
yeah.
as with client, when we have clients of this kind of size and complexity, we just want to make sure that we're taking extra precautionary steps to keep them safe. And also we're small enough to, you know again, we're kind of fanatical about all this stuff, and the money movements, and wires, and we're fanatical about making people, calling people, making sure it's them, we know their voices, that kind of thing. We've got different controls on that side as well. So we're just taking the necessary steps to make sure that we're doing right by these clients, and that if there's anything that we could do, then it's on us to do. It's our fiduciary duty.
So can you share, now I'm just genuinely intrigued, like what else do you have on the controls end of just, essentially making sure the client's the client? I mean, I think you just said something there about like check, voice checks or like calling
Yes.
your kind of
Yeah.
report.
So if somebody does want to send a wire, we are typically only sending a wire for a house closing. We try to do a lot of kind of paper checks, because it's not a wire. You're sending it, and the account number is floating around, and God forbid the client sends the wrong instructions. That
Right.
wire is instantaneously gone. So any
Right.
wire, we have a test wire that we send. That's just, that's necessary. So we have to send a test wire.
Oh, so
Then
even if you're wiring somewhere, like you'll send $1, make the other side
yes.
confirm the dollar showed up, and then
Yes.
send the $7.2 million or whatever it is
Exactly.
for the big
Absolutely.
transfer.
Yep. And then, we also, the instructions have to be written, and, they have to be in a certain way. They can't just say, send to this account. And, it's almost like we try to find another way to send money, because it can, and typically, obviously, we know we do this every day, but like on the client side, it's different. Or when there is a large transaction, it's on the kind of the other side to send us the wire, but we encourage them to send us a test wire. Like, no one wants to send $50 million to the wrong place. So,
It's
you know,
really awkward. Just egg on your
yeah.
face. Yeah.
So, send $5 a day before. And like, we're very, very kind of into that stuff. And that's what people who have $50 million plus, they really want, because, it's that stuff that really is risky, and really does matter. And you have to master the basics before you go on to, the financial planning, the trust and estates planning, and the tax planning. Like, you have to get this operational piece right. And this is the piece that nobody really wants to do. And so it can make or break the entire relationship, quite honestly. I mean, the banks, and other houses, they don't have this level of scrutiny when it comes to the operational piece, which is why we said, you know what, this is a pain point. The clients always get asked their account number when they're going to the banks, and they always, they have to go through
Right.
this and that. Here, it's like any paperwork we send them to sign gets pre-filled by us. They don't have to do anything. We're making sure it's correct. That's been reviewed. We have accountants in house. The accounts are set up properly. Like, these are very basic things that on the operations, it sounds very basic, but that's what goes a long way with them, because that all that risk is on them when they go outside of here.
Right. And it's
That's
like,
that's
it's,
the pain. That's where the
yeah,
pain is.
the pain, like for the client of,
Exactly.
otherwise I have to double check and triple check
Yeah.
everything all the time, which
Right.
just at some point takes up my mental bandwidth and mind share. That if I'm running, whatever, if I'm running $1 billion business, I'd like to focus on other business things and
Exactly.
um,
Exactly.
not have to triple check my person's transfer instruction.
Right.
Can't,
Right.
can't they? Can't they triple check themselves?
Exactly.
Interesting. So I mean, I'm struck as you frame it. As you said, it's like it's getting the. I mean, it's getting the basics right, but they're not that basic because they're actually kind of hard to do in volume at scale.
Yes, absolutely. It's the basics at this size is, when you have this size and the complexity, the basics aren't so basic. That's true.
So then, how does the I guess it's like the advisor structure or team structure work? I'm not even sure how you frame them, but just you've got all these different experts across all these functional areas serving these clients with all the support that goes with it. Like, how do these teams get structured? Like, is there a lead person who wrangles everyone else? Is it more
Yeah.
team based? Like, how
It's a
just
great question. So they're
how do you do the
structured
team?
structured by two different things. One
Okay.
is kind of like skill and expertise, meaning, like, you need training in, let's say you're a tax preparer or you're in charge of tax planning for a client. Like, you need that skill and that expertise, and that is under the tax department. But then, in terms of the client experience and the practice area, that's different. That you're under the family office practice area. You're under this umbrella. So it's, you have kind of one line is the training, the skill, the expertise. You're preparing returns. You have these deadlines. You have that process. So you're learning that from that department, but and you are providing white glove service to a client. You are, and the tax department is as well. But here, you're really working for the benefit of that one client on this client team. So you are also, following the client experience of the clients in the family office.
Okay.
So it's
So
kind of a dual, I would say, dual kind of mandate if you're, let's say on the tax side.
so how does this team structure work for just to the end client?
Yeah, good question. So typically there's a client relationship leader at the firm who is really like the lead kind of liaison to the firm, and that's for your business. That's typically the person that you have, the strongest relationship with, who you've known the longest, right? And then, these other services, like once family office gets in, then, you're managing their wealth, you're managing your wealth here, and that typically the family office really kind of becomes the person on the personal side that's quarterbacking, like your family and your family situation. Now, if it's personal stuff, it's family office typically, and then, the wealth management would rope in, let's say, somebody on the tax side. Now, if they have personal, very complex tax needs, then they're also talking to a professional on the tax side in the family office. So it just depends on, the type of client, and but typically there's at least two people at least that are, or two disciplines that are very, that are kind of quarterbacking, one for the business, one for the personal. But then in the meetings, it's like you've got a plethora of people from all these disciplines, because we're going over tax, we're going over investments, we're going over, other things typically.
So then on the personal side within the family office, how does the team structure work?
hmm That's a good question. So there's typically one person on the tax side who's in charge of like any tax engagement. And then on the wealth management side for clients that are above 10 million, typically you've got at least two main advisors working on the client. And it's really a team effort. And we're talking all the time. I mean, we all sit in the same area in the family office, and we're coordinating on any conversation that has a tax component and an investment or a financial planning component. I mean, it's all day we're talking. So it's that's the integration is very important.
So if I'm the client, I'm calling one of my two advisors assigned to me on the wealth management side for my family office stuff.
hmm yes.
And how
Or
many
you might have a group email, like a lot of our families have, let's say it's
really?
Kitsies at wisfamilyoffice.com. And that, you ask a question and that goes to the tax person, that goes to the wealth management people, that goes to the client relationship leader. And that's really like for the larger accounts, that's really the best approach because honestly, these are loaded questions that you get asked that
Right.
involve
Well, they
they can
ask questions and don't even realize how many departments it could actually involve.
Exactly. Like where, my daughter is bidding on this house. Where should I take it? And all of a sudden there's a meeting with five people internally, because it's they have so many entities. This is stuff that, if you talk to a single family office, like somebody in the family office has to handle, and sometimes they have to call like an attorney, an accountant, and the wealth manager, and it's then they have like their own internal spreadsheets, and it's really painful, and that's what we try to alleviate. So having that one email, they can ask the questions, and then if it has to do, and we streamline it, of course, depending on the client, but typically when it has to do with like a transfer of money, it's the person answering is typically on the wealth management side, in family office, but wealth management, because we're doing, we're pulling it out of the account. Now, again, if we didn't check with everybody, we want to make sure we're doing the right thing, and that's why we have these client teams. It's not that simple. Every question is very takes a lot of people.
I'm just fascinated by the idea that there's so many folks who might want to chime into a client question that clients literally just have a group email
Yeah,
address
I
for
mean,
all the
yeah,
team members
yeah,
assigned to them. That's really
yeah,
cool.
yeah. It's necessary because it's and it also teaches you about, like you just never know, if there's something there's so much complexity in each one of these disciplines that some little thing can throw it off, and you realize you're better off checking with everybody.
So, so who I'm just trying to still envision who are the stakeholders on a group email.
Yeah, so you've got typically one client, one kind of one or two client service people, one person who really is on the investment side, maybe a CFA or somebody who really is responsible for like rebalancing and trading and withdrawing money. Then
Okay.
you've got one anywhere from two to three kind of more senior advisors, financial advisors. You've got whoever is handling them on the tax side, on the individual tax side in the family office. You've got, let's say they're a real estate client, you've got the client relationship leader on the let's say that person is in the real estate niche, you have that person on there as well. So that's kind of the crew, I would say, for let's say a real estate, an ultra high net worth family real estate family office client. And that person may also, obviously has other people on the business side who help them in their business. And that's another crew of people. It's funny, we sent a client a gift the other day, and we all signed, and there were 30 people that signed, and that was that was across the firm, just to say congratulations on your son's wedding. And, I was like, wow, this is incredible. And, that's not uncommon for us. But, these professionals are needed, and it takes a village really to service any one of these clients. And their families are typically larger, many people there, siblings, kids, grandkids, great grandkids, maybe aging parents as well. And it's kind of any question, like I said, is a loaded question.
So, from the team's end, are team assigned to specific clients that sort of become their dedicated assignees? If I'm a client service person, like these are the 10 clients or 30 clients or however many it is, are the clients I'm responsible for doing the service things for.
Yes, exactly. They are. That's based on fit. It's based on, different things, but we try and match the best people to that client.
So what goes into the the
Yeah, the
matching
thought
formula?
process. Yeah, that's a great
Yeah,
question. I mean, so many different variables, whether, how large, the size of the client, I'd say complexity of the client, um, whether, different types of details involved in the client, the account setup, number of money movements, what kind of money movements, who's calling for money movements, all of that stuff goes into it. Um, you
how
know,
how do you end out with different people based on like volume of money movements? Just because some have more
yeah.
capacity than others, or are there like other nuances to how you drive this decision?
I think it's capacity, but also some people are, it's capacity, definitely, but it's also like, you've got different people are good at different things. That's how you kind of build a team. And you've got your financial planners, um, you've got your investment advisors, and people who love investment analysis. You've got people who
Right.
love service, who are excellent at service. Now we all have to be excellent at service, but there's a spectrum where you can lean more. Different people are they lean more towards one thing, and they have more expertise in one thing, and then that's how we kind of match them up. But we also, on the money movement side, it's really like you have a lot of money movements and they're big, then you need to match them with somebody who has that high attention to detail. And honestly, most people in the family office have that. That's, I would say, the hardest thing when we are hiring client service associates. So we do a lot of training on our own, because this is a hard thing to hire for. Oh, hi, you're doing 50 money movements a year for this one client, and everyone is over $1 million. How do you feel about that? It's not something that you typically get
Right.
other service associates that are like skilled in that, because it doesn't really exist, I would say. So we kind of had to, I'd say, experiment with this. And like, just because you have experience as a client service associate doesn't mean that you're going to be good at this, because this is not your typical client. And so that was like a real tough thing to kind of realize, was like, just, we're looking for experienced people because we think that's the way to go. But that wasn't always the right thing to do. And we learned some tough lessons with that.
So what what was the version that didn't work then?
Yeah, I mean, it was, and I'm having flashbacks right now, but hiring people from wirehouses on the service side, we said we need people who are really great at service. We're talking to these ultra high net worth clients, and we want to provide this exceptional service. But what we found was the ones that we had hired, they didn't have that level of, they didn't necessarily have the same experience, right? And because they weren't opening 200 accounts for one family. That's just not a normal thing in the industry. Like,
Right.
and they weren't going through these transactions, and they weren't necessarily having to open these different types of entity accounts. That just doesn't It's not something you necessarily you know um go through at a wirehouse, nor is it at an RIA like this. Oh,
Yeah.
we're growing at 50% a year. Are you okay with opening all these accounts in one day? It's That's just a different level of um, work, I would say, and detail too, like the money move between the different types of accounts, the number of money movements, the size of the money movements, the size of the family, the pace at which we're growing, we realize like we're a different animal. And we're kind of a unicorn, and we have the platform, and we have this incredible pipeline of amazing clients that need help, and they're incredibly appreciative. They're lovely people, and we want to do service them right. So that's when we realize like this is not, all those things I just named is not something we're going to find. We're not going to find people who have this experience because it's very rare. So on the client service side, we decided to train our own people, and that's been like, a great decision. We want to have people grow in house and have people who have the same vision and the same passion for clients, and who are kind of love this idea, love what we're building. And, that's kind of the path that we decided to take after having really, tried the other way.
So then where do you hire them, or where do they come from internally to figure out who's ultimately going to excel in this unique role with
Yes.
unique clientele?
So, the 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 people with a little bit of experience, in the financial services industry, or people coming out of finance, masters in finance or masters in accounting, and CFP programs are all kind of great candidates for us. They're kind of, they love the business, they want to be in the business, and they're not coming with habits that are from
Right.
somewhere else. And then we have like senior advisors that have work that we've hired externally, and that's different. But there is kind of a learning, I would say, a learning period, and a kind of a phase where you're trying to learn more about the other services in the firm. So we do have senior people that we've hired from the external market. It's the service people that we've gotten a lot internally, or hired them from these different
And
programs.
and this is, I mean, we're talking about service people doing, I was going to nominally say paperwork
Hmm.
that maybe understates it, because like paperwork's different when you're opening 200 accounts for one family with 17 entities and 11
Right.
trusts and all and such. But I just want to make sure I'm understanding. I mean, you're ultimately talking about you're looking for people with master's degrees to do just this level of work, because it's actually pretty complex.
Yeah, I mean, and they're growing into CFPs and advisors. Like everybody is
Okay.
on track to become an advisor, and most of our staff, they are advisors.
Okay.
So,
So
you
this
know,
is like the entry to the career
entry,
path. You want to really learn how to serve these people in the long term. Like,
correct.
spend 2 years
Exactly.
doing the service paperwork that's required, and now you'll really learn what
Exactly.
it
Because
takes
Yeah,
to serve them
because
well.
when you know that side of things, like,
Yeah.
it's a lot easier to
Oh, yeah.
become an advisor. But we push people to do more, to become advisors, to, everyone's licensed. We want people, the firm is growing so quickly that, it's like we can't afford to have people who don't want to grow. So this is a stepping stone to learn the business, to learn the rope, learn the trading side of things, learn the money movements. Like you can't become an advisor in our family office if you don't know this stuff. It's not going to work, because a lot of times the questions, the day to day is about this stuff, and you can't just say I don't know as an advisor. So like you come from the outside, you kind of have to know about this stuff. And it's exciting. You get to work directly with the client. You get to be in these meetings with like these incredibly inspiring business owners, and they all have amazing stories. And they're so grateful that we're helping them as well. That's another thing that is very different than being at a wirehouse. Here it's like you're appreciated because you're taking this pain away, that these clients have experienced, because of their wealth. And so we empathize with that, and we take that very seriously. And they love what we're building for them, and how we're really taking that quarterback role away from them, because that's where the pain was.
I'm struck in how you're framing that, because for better or worse, there's certain stereotypes out there about ultra high net worth clients. So just it it jumps out to me that when you frame it of these tend to be very positive relationships, like they've had pain of difficulty coordinating and managing the wealth, and they really are uh, grateful and appreciative of the fact that you're solving their problems.
Yes, absolutely. Our clients are very, very appreciative, very nice, and it all stems from the relationship that they've had with the accountants. The accountants have helped them through their struggles, and they've really helped their families and helped them oftentimes grow their business into something spectacular that they've sold, for example, and now they're passing their wealth on, and it's becoming like we're kind of advising them on their legacy. And it's just a cool full circle story, and so that makes the relationship great. Is that some people tell the accountants, I'm more worried about you dying than me dying, because they know where everything is. And it's for these complex families, life becomes just a burden, I guess, if you could call it that, when they don't have that person, or that they don't have that family office and that CPA really to help them coordinate everything.
So, how does this work from a client capacity end? I don't know, like how many clients does a senior advisor have when you're in this level of high touch and involvement and second set of eyes on everything?
Yeah, I mean, as you can imagine, we're hiring. We're always going to be kind of in the cert. We're always like looking for good talent, and we're constantly interviewing, because it might take a while to find the right fit. But that, I mean, it depends on, really, I would say, the onboarding and the initial phases. We're meeting all the time with the client, and after a while they might get sick of meeting us monthly, and we're meeting them less. But so you cannot handle too many of these relationships, as you can imagine. Also, their families grow, so it's you're constantly kind of doing things for new people in the family, or there are changes in the family, or somebody gets married and somebody gets divorced, and there's just a lot of moving pieces with these families. So depending on the relationship and the complexity, it gets easier as time goes on. I would say the first couple of years is pretty hefty. And we never, like I said, we don't have one advisor on these relationships. There's always at least two advisors. So that kind of the work is definitely shared. And then we've got that service team who's really key in these relationships, and they handle the creation of the presentations, and everything is obviously reviewed by the senior advisors, but they do a lot of things behind the scenes that we're very grateful for as well.
So, so ultimately, like, what's a typical client load for a two advisor team? I mean, I just have no context in your world, right? An industry site would say the average two advisor team has 150 clients.
Right.
Clearly, that's not your numbers.
No, it's going to be less than that. I'd say probably around, that's a good question, probably around, depending on the client, 100 clients.
Okay.
But not of that, not all of them can be. It also, it's not, I would say, we don't really base it on asset level, it's on complexity. But
Okay.
if it's ultra complex, it could be like the partner on the tax side is handling a lot of the issues that, or the issues that can arise. So I would say it depends on the client, but the more complex it's going to be, you're going to have, if you have, every client is as different as every person's fingerprint. I would say that's something I've learned, is there are not two complex clients that are the same. Um, but I would say the more complex, you've got, less of a chance of having more clients per advisor. But I would say 100 is, 100 is a high number, but it's doable.
For two people who are sharing it.
Correct.
Okay. And then how you mentioned earlier, like meetings may be monthly at the beginning for a while because there's just so much to onboard or get through. I guess I'm wondering what is typical, like meeting cadence or frequency of interactions for ongoing clients? Like once you're out of just the intense onboarding, I'm just trying to visualize like
Yeah.
what are the service expectations
I would say it's
at
I
that
mean,
level?
some of them it's still monthly depending on if they want that, then we offer that. Some of them want them to move to quarterly after a couple of years. So it's anywhere from monthly to quarterly really is the typical cadence if they're
And
ultra complex.
and what's getting covered at that
Mhm.
frequency? I mean, that's a lot more than just what did the markets do this month.
Yeah, I mean, what did the markets do this month? Everything from like, unrealized gains, realized gains and losses, that's a big one. We have this much in tax savings. Like that's, let's say they're in the year of a transaction and we're able to harvest losses on to offset some of those gains. So that's something that we cover at those meetings. It's also sometimes when they go from having a business and not having that business anymore. And they have to have that like steady, they want to know where's my steady kind of street cash
Yep.
flow coming from. So we're covering like not only unrealized gains and losses, unrealized gains, realized gains or losses. And then, that's something the tax professional bit maybe in the meeting with us as well to talk about, let's say, the tax payments coming up, and this is the money we put aside for the tax reserve for anything from now until, let's say, April 2026, when you have to pay the tax for your transaction from these entities, from the personal side as well. And then let's say there's a income, that people love talking about income as well. So, we always cover, like, God forbid, this is what happens in your portfolio. You always have this steady stream of income. So all of that gets covered. Any type of other things on the personal side, whether that's somebody's building a home or anything financial planning wise for their kids or gifting, charitable planning. We'd like to, this stock has appreciated. Let's put it in your donor advised fund, that kind of thing. Any questions they have on anything that's happening outside, whether they're, they might have real estate assets that they're going to have cash flow from. Cash management services, that's another, moving money around and, investing in whether it's treasuries or VRDNs or ultra short term munis, and changes in the yield curve. That's a big one. We've got a lot of cash on our books, which is why that's kind of always going to be one of our businesses, is because of the tax payments. So we talk a lot about cash. Anything happening that they need to know on the tax side is going to be covered in that meeting as well. Changes in their family, anything that they're concerned about. And that's kind of it. And it's nice to have that kind of these structured meetings set up, just so that they know it's coming up, and they might have questions that they can bring up then. And it also helps them kind of build trust in us to kind of keep getting in front of them, and this way we get to know each other.
So so as you reflect on all of this, just what surprised you the most about building out and executing in this multifamily office environment?
I would say, like, what surprised me the most is kind of the level of trust that we have, just being with with an accounting firm. You're part of the trusted advisor clan, and it's really a special thing. And you said, oh, it's great that you guys have such nice clients, but I think it's because you know the accountant is the ultimate fiduciary and the ultimate trusted advisor in their life. And I think being part of that and really being kind of knowledgeable about their business and their pain, and that's their baby, right? That business that they grew, and just being able to talk about that gives you that that data, that knowledge, where you're really kind of understanding what they've been through. If you're in a wirehouse, for example, you don't necessarily have that information, and you haven't been through that. You're coming at it from a completely different angle, and I think that that's something that I really appreciate, coming from that wirehouse environment, where I didn't have that trust immediately. Here, it's again, it's you're just really in with like what they've been through, and that's the best part about being here.
So, relative to being in the wirehouse world, how different the implicit trust is on day one because you're with WIS, the accounting firm that does all of our business accounting and audit already.
Yes, exactly. I mean, we have clients that the first time they meet us, a lot of them are like, "Oh, this is such a relief. Thank God." Like, send me the paperwork, It's like day one. And that's not the case at a wirehouse. And the,
No.
the types of clients that you're attracting are very different.
And that's all because WIS was this large, long-standing accounting firm that decided to start the family office side and had, so I think, like pent-up demand, as it were, so they could drive a lot of activity quickly.
That's part of it. Yeah, that's definitely part of it. I mean, and people have been with WIS for so long, and WIS has done such a good job for them as their accountant.
So, what was the low point on this journey of building out the multifamily office?
I would say having to figure out how to hire. And, given like I would call us kind of kind of a unicorn in terms of what we've built. You have to hire people that are highly collaborative and that can not be afraid to learn and to be vulnerable and say, I don't know, let me go talk to the tax person on the account, and be able to kind of know enough to be dangerous on the tax side, and make sure that you're understanding the estate planning side, and make sure you're understanding the details. And I think trying to find that person, at first we didn't know what that really looked like. And I got here and kind of learned it from scratch and just assumed people would learn it too, but it's not always like that because advisors are trained differently. So I think the low point was really just trying to figure out who to hire and where to hire from. And I love people. I love meeting people, and I'm extremely optimistic, and I can always find something good in people. And our leaders are like that at WIS as well. And again, like I said, we're always interviewing, but like just trying to really make sure that we have someone who's dedicated to the vision, dedicated to what we're building, who loves clients, who loves collaborating, because if they can't collaborate, it's going to be very hard to do business here. Who's honest as well. Like, we've got a lot of integrity, and we trust our people as well. So finding people who are financial advisors, who are all of those things, or even on the service side, like just trying to find the right crew of people to hire, I would say was a challenge. And also really finding people that appreciate kind of what we built, and the model, and the actual platform we have is incredible. Like, we have these incredible clients. You're part of the crew. You're trusted as an advisor. The CPAs are incredible people as well. Like, our culture is very collaborative. These clients are, they're very complicated, so you have to work with other advisors and other people in the CPA firm. So that's a very different, and you're given these clients kind of, the platform is here. So it's a really good situation, I would say, for an advisor. So it's like we have a lot to offer. Um, so finding the right people, I would say, is very hard, and it's something that I think, yeah, we did hit a low point there. When we were just kind of looking and saying, where are they? Are they out here? How do we find them? Where do we go? And also building the operation. That was also, as you mentioned, a difficult thing. And trying to get that right was hard. So we're a lot smarter now, and I think that we've got we know that we have something really special. And um, you know, we know what we want now. But there was a point at which it was like, we had a lot of hope for the future.
So, can you explain further just what changed that it got better for you, right? I mean, in principle, like we want people who are on board with the mission and vision of what we're building and like clients and collaborating. Like,
Hmm.
cool, but like what wasn't working about was finding those people before that's suddenly working so much better now. Like, what did you actually change or do differently?
We figured out, I think, what worked and the characteristics that we were looking for in people, and things that we were not looking for in people as well. And that's kind of how we started hiring, is by through making sure that we had certain things in people, and just being very kind of honest with ourselves, that like, hey, this person may sound great in the interview, but they don't have this and this, or we feel like they're from the wrong environment, and it's they have kind of the wrong idea about the business, or their motives are different, their motivations for being in the business are different. Although somebody may be very skilled, if they don't have the right motivations, then it's going to be very difficult for us to work together. So it's that, like, we figured out it was, we need skilled people, but it's that the motivations and their story was like, became very important when we were hiring. And then, having many people in the organization meet them, that was also helpful, because different people pick up on different things. And then just kind of taking a breath and making sure that we're taking our time when we're making these critical hires as well.
So were there like particular screening factors or questions you started asking to like to filter these out or figure out who really are the right fits or not right fits?
Yeah, absolutely. I mean, we have a whole process with, we have an internal recruiter as well. First they meet myself, they meet, the other advisors in the family office, and then they meet, more people if those interactions are positive. But the questions we ask are, obviously, what kinds of clients they serve, the growth of their firms. And we very rarely find that other firms are growing like us. So we know that that's going to be a challenge off the bat, and that,
Right.
we're going to need to give people time to acclimate, and to kind of drink from the fire hose, and figure out kind of how we can help. So, everybody has some time to adapt. But, aside from those questions just about their day to day and about the actual outfit that they're at, we ask about, any leadership experience they've had. Have you ever been on a team? Like, the team thing is such a big thing for us, because, like, honestly, it's, if you can't be on a team and collaborate, like, that is, I would say, the number one thing that, we might pick up on, that, some advisors kind of like to work on their own, and here it's going to be very hard because of the size of the clients and the way we're organized, to do that. So I would say asking questions around, have they ever been on a team? Are they on a team now? How is that structured? And trying to pick up on that vibe, the story. Have they been through, their own story? Like, have they been through any adversity and difficult, like, low points in their life? And how have they kind of gotten past that? What have they learned? And, we want to see kind of growth and evolution of the individual, because they're going to come here and it's going to be not like their other place. And that's a good thing. So, yeah, I think, these specific things, and really trying to get to who the person is, rather than like just the skill, is we get very personal. And in, when we're trying to get to know somebody, we want to know who is this person, because we're going to commit to you, and, we're going to commit to helping you, and we're going to commit to being in it with you, and, making sure that you're successful ultimately as leaders. That's what we do here. And so we're going to go through a lot together. And, do we want do we want you on the team? Do we believe in you enough to kind of commit to you, and make sure that, we can get you through those tough times as well? And do you trust us ultimately? Like, do you have what it takes to trust somebody else as well? Because again, we're very different. We also have an assessment. It's a test of attentional and interpersonal style that we give to people, and it's a lot of random questions that, help us. It's just a
So
procedural thing at the firm that we use as well.
is that like a third party tool or this is a series of internal questions you created?
This is a third party tool.
So
It's
what's your tool of choice then?
It's called the TASE, the Test of Attentional and Interpersonal Style, and it's something that that our recruiter delivers to them, and they do this at home. And this is really just kind of another step in the process. And this is, we do this, we do the interviews, and we've got several rounds of interviews. And quite honestly, like I think we do a pretty good job now hiring. And you can never get it 100%, but you can get it
Right.
pretty close if you take your time and you're collaborative and do all these different things.
So what else do you know now you wish you could like go back and tell you 5+ years ago as you were or earlier in launching this with Wist?
Oh yeah, I mean I would say like just just knowing that there's going to be bumps when you're building something out, and being patient, I would say, because what we built has been it's been an incredible success. It's been you know I think we had the vision right from day one, and we stuck to that. And I guess I wish I knew more about the operational side. But we wouldn't have done it any other way. Like we built it around the client. And I think that the operational side of it was something that day one we kind of just said, let's go backwards from the vision. But that's an area that I would say, look, talking to different operators and peers, it's, I feel like, an area, and it's interesting that we're honing in on it. And I think that's great because it's an area that's nobody feels like that it's easy, like building the operations of an RIA, more specifically in an accounting firm. It's very challenging. And I think that's an area that, having more expertise and knowledge on, different things could have helped us.
So what advice would you give other advisory firms that want to come in the direction of moving up market, as it were, into ultra high net worth families?
I would say make sure that you have accountants. Make sure that you're really focused on tax and estate planning, and integrating those areas. And that's really hard to do, because we've got the backbone as an accounting firm with all these different areas of expertise. I would say, like, for an RIA, you might want to partner with an accounting firm, because hiring like one accountant might not do the trick. But I would say, like, the tax piece and the estate planning piece are just, when you're moving up market, those are areas that you absolutely have to focus on. It doesn't work to just ignore those areas. The client is not going to be fulfilled really by like what you're kind of helping them with if you don't also integrate those dimensions.
So as we wrap up, this is a podcast about success, and just one of the things we've long observed that that word success means very different things to different people. And so you're on this wonderful track in growing the advisory firm itself as you're, I think it's crossing a billion of AUM in 7 years and this like monstrous growth rate. So the business seems to be in a wonderful place now. How do you define success personally for yourself now?
hmm That's a great question, and I think it's different for everybody. But I think, as we're growing, and as we're past this kind of startup phase, success personally would be like really making an impact in people's lives, and that could be clients, that could be my team, that could be my family, my kids. Making sure I'm present, and making sure that I'm building, that I'm building my own kind of personal impact, and that what I'm doing every day is impactful, I would say, is what I'm, very focused on right now. Making sure that I'm helping clients, let's say, carry out their legacy, and making sure that I'm creating these stronger connections, whether it's with clients, with my team, with my family. Just making sure that I have that impact is really what is most fulfilling to me at this point.
I love it. Well, thank you so much, Stephanie, for joining us.
Thank you for having me. This was great.
Absolutely. Thank you.
Want even more ideas, tools, and resources on how to break through to the next level of success as a financial advisor? Check out the leading financial planning industry blog, Nerd's Eye View, at www.kitsis.com, where Michael covers the latest practice management trends and financial planning strategies. And by joining the members section, you can earn IMCA and CFP continuing education credits, along with exclusive member content. Get it all now at www.kitsis.com.